Hello, everyone, and welcome to our first webinar organized by Atelier Privé, a Dubai media based in the Middle East, covering all the aspects of the real estate investment, finance, and the art of living in the Middle East for a global audience. Today, we'll be talking about real estate market, real estate trends in 2026, and we'll be talking with two great experts that I will introduce shortly. Thank you very much for joining us. Before we start, just a couple of things to mention. We are broadcasting this webinar live in different platforms. If you follow us in YouTube, you can leave your comments and leave your questions, and we will go through those questions at the end of the broadcast. So you can ask anything, any doubts that you may have during the broadcast, and our guest will respond. You can also follow this broadcast in our official pages in Instagram and LinkedIn. In case if you follow us from there, you can also comment and leave likes. And also don't forget to follow our pages. Before I introduce, I will also mention that this webinar is recorded. So in case if you can't follow us during the whole broadcast, you can also check the recording video at the end of the broadcast. We will share it with our audience. So I will not waste more time. I will invite our guests to the stage. So hello, everyone. Let me introduce you. So today we'll be talking with Alexander Kiryatskych, co-founder, CEO, and managing partner at Segrex Development, and also Angelos Bougas, co-founder and managing partner at Oakley Group. Thank you very much for joining us today.
Thank you, guys.
So let's start. We have a few questions. So it's going to be a sort of a round table. We will exchange some thoughts and opinions. And then, as I said, our audience can also participate by asking questions by themselves. Let's start with the first question. A little introduction. So can you tell us a little bit more about your business, about your background in the real estate market? Angelos, let's start with you.
Yeah, absolutely. Thank you so much for having us over. So I'm originally from Greece, grew up there. When I was 18, I moved to the US, studied film and international affairs in Boston. I was initially looking to go to Los Angeles and make a career in film. Somehow ended up in New York, where I worked for a startup selling chips from salmon skin. But a year later, somehow the company went bankrupt. My visa expired, so I landed in Dubai, started as an agent 5 years ago. And then a year later, I started with my cousin what is known today as Oakley, which is a property management company focused on luxury property management. Today, we operate 130 units in Dubai, with a focus on medium-term stays. We also have an investment and renovations department. And we just recently also expanded to Abu Dhabi, and we have a total team of 41 people in our group.
Okay, sounds great. Alex, what about you?
So basically, I'm born in USSR and I live in Russia. I started career in Russia, but I have a lot of experience all around the world. My basic education is engineering education. I got it in Finland. This is the northern country, which is well known near the St. Petersburg. My career was started in 28. So I started as a salesperson. Then I understand that sales and marketing is not full things that I want to do in the development. And I restart my career as an engineer. I working in Algeria, in France, Paris, Czech Republic, Nepal, many cities all around Russia. And basically, I moved to Dubai in 12, 16. From that point, I was project manager and the owner representative. Then I established the Secrex development with my partners. And right now we have more than 15 projects in the pipeline and a full cycle of development from the land purchasing to handing over the keys to our customers. We do full the cycle inside the company. We have development company, design company, marketing company, sales and master agency, and also general construction company. So we plan to stay in Dubai. We love Dubai. We love Middle East, and we focus about this region. So, in
Yeah,
two words like this.
sounds like a great journey, and I think we will hear a lot of interesting insights considering those topics that we prepared for today's broadcast. So let's start with the first question, because every time we talk about a real estate market in Dubai right now, of course, we have to take into consideration certain events that took place in the past. And I would like to know your thoughts about where we were a few months ago when different instabilities and geopolitical instabilities took place in Dubai, well, in the Middle East in general, and where we are right now. So, from the professional point of view, could you share your opinion about it? Well, in this case, maybe we can start with Alex, and then we move to Angelos.
Okay, so first to me. Good. So, to be honest, when the war, let's say, this crisis started, we was, in my opinion, in the peak of the market. So you remember the prices. You remember that's no units available in the good developers. You remember that's absolutely crazy situation with the land plots because the price for the lands for the last 2 years uh, higher more than 300% in some location, 1000%. Let's say Dubai Islands from the 100 dirham in 2021 to 1000 dirham in 2026 before the war. So the market was overheated, in our opinion, especially for the developers, because our main business is to purchase the good plot in a good location, design and build buildings, sell it, construct, and hand in over the keys. This is the simple business in a one way. But the price of the land is squeeze us before the war because land market growing much more faster. That's the price on the apartments on the off sales plan. So, and we faced right now after these, let's say, congestions has happened in this region, we faced this very simple situation. Dubai changed the manner of the business. So I saw in Dubai, I saw 2 or 3 crises previously, and I saw how people is moving out. But when the war started, many people stay. Many men stay because they have established the business in Dubai, they have established the business in the Middle East, and they don't want to leave the country. And this helps to the real estate market to be stable. Let's say in a March, the real estate market, especially off-plan sales, drop it down for the 40%, but the price, general price on off-plan sales, drop only 5%. In April, we saw that the real estate market in the off-plan sales is recovered. In the May, we face that the volume of May 2026 and volume of May 2025 is average the same. It's mean that the market and Dubai itself as a city is growing from the touristic location and the local location, I mean regional location, to the worldwide location. So it's mean that economics of this city and economic of real estate sector in off plan is very stable, and the people wants to stay there. So they don't, they don't change their plans, especially when they saw that um, this situation between the Iran and US and Israel is stabilized. So, and what we see right now, that's the land market, especially important for the developers, is to stabilize also because landlords don't want to drop the price. They don't want to give a lot of discounts. And means that the most of the people and the most of economic agents inside of this local economic local economic of Dubai, is still believe that recovery will be after the situation will be freezed in the political level.
Okay. Hey, thank you. That's a great overview. And you also covered some of the things that we'll be talking about in the future as well with our future questions. Angelos, could you share your opinion about these events?
Yeah, absolutely. I think it's interesting to hear the perspective from Alex, who's in the developer sector. We are, as mentioned, in the property management sector. So the things we notice are mostly really related to rentals and to what happens to a property once it's handed over. So before the conflict started, we saw our occupancy hover in the 93 to 97% range, which effectively meant being fully booked. And at the same time, the rates which we were charging up until February were at an all-time high, the highest we had ever charged over the last few years of operation. Now, when the US attacked Iran and the regional disruption took place, we saw occupancy across the market in effectively hotels and in operators who operate in the short term fall to as low as 10%, which was a significant decrease. We held steady at 50%. I believe that was the lowest point of occupancy that we reached because most of our units were rented medium term. So the disruption didn't affect us as much. But overall, in the sector, we saw a significant disruption. Many hotels closed for renovation or refurbishment and planning to reopen after the summer. So the disruption was quite significant at that moment. Now, post ceasefire, as a company, we're back to the mid 80s range. That's where our occupancy is right now. Though I should say that still a lot of the market is still suffering a lot in terms of occupancy. We still see a lot of hotels being under 20-30% occupancy rate. But the most important thing to say is that the rates at the moment, daily, weekly, monthly rates, have fallen anywhere from 10 to 60% compared to what we saw in 2025. Now, the big variety effectively is related to the asset type. So a unit which is located in a touristy area, for example, in JBR, and would typically cater to families, suffers the most, whereas a smaller unit in a secondary area like JVC or Sports City, which would not cater to tourists, might be affected as low as 10% compared to what we saw last year. Now, again, that doesn't mean that this would be reflected in the sale price. It's just a temporary shock that we see in the rental market. In terms of the months ahead, now anyway, it's, let's say, the lowest season of the year. The summer softness that we see, of course, is partly seasonal, but also partly structural because of the situation. But looking forward after the summer, our hope, based on the data we gather so far, is that we target a price range that's approximately 10% below of what we achieved last year, though the socio-political situation will largely determine whether or not that becomes an achievable target.
Mm-hmm. And speaking about prices and the future, let's say my next question was the second part of the previous one, because we talked about the past and we talked about present, but also for many people who are not really involved in real estate but are interested in real estate market, maybe you could highlight. You talked about the future, both of you, but maybe you could highlight maybe 2 or 3 main trends that we would definitely see in the real estate market in Dubai during the second half of 2026. So something that you would highlight and something that you would like to deliver to potential customers, considering the world and the whole situation we're living in right now. Maybe Angelos, you could start with this question and then we move to Alex.
Yeah, it's a fantastic question. I think there are 2 or 3 key trends that I could identify from my point of view. The first is that we see medium-term flexible living solutions replacing both ends of the market. So at the moment, to give you a sense of perspective, over 70% of our portfolio is booked for 30 nights stays or longer, which last year would be significantly less. Also, many people who would consider before leasing on a yearly jari contract, or people who before would purchase property and stay in it, are now sort of considering more to rent a property for a couple of months, see how the market develops, and then take their decision. So that's the first trend. Second trend that we see from our perspective is that the booking window has in a way collapsed. Before last year, we would see a lot of our properties during this time be booked in advance. Last June, we even had a lot of reservations for as far as October, November of the coming year. Whereas now, while we do have high occupancy, we see that most people make plans more in the last minute, usually 1 week before it's their time to travel. Again, because my understanding is that they want to feel safe and they want to be sure that their plans hold. The last point, which I should mention, is we see that the operator landscape is in a way consolidating. Many companies which were operating in our field, especially under subleasing models, had extreme pressure in terms of performance and in terms of the revenue that they could generate. So we see many players exiting the market, and in a way, that's the first big stress test that our industry has seen in a long time.
Okay, great. Thank you, Angelos. Alex, could you share your thoughts regarding the main trends that we should expect during the second half of 2026?
So I try to identify three main things, and I start from the global. And first of all, as I mentioned in the first part of my talk, Dubai is now the global city and the global economy, which is showing us that this city is stable in the event of the regional conflict. This city is not empty right now. We back to the traffic. We back to the occupancy. We back to the market very, very fast. Only 1.5 months and Dubai starts back on track again. Number one. Number two, if we see the developer market, we will see that the main developers, the big developers, the developers who have the good stock for the brokers, the good product itself, and a good strategy, aggressive strategy in the market, they keep their sales on the same level. Let's see how Ellington did last month and they project in Dubai Island. So it's fully booked, fully sold out. Let's see how we are as a Segregs doing. We don't have a stock. Every apartment that we have in a stock, we sold out, even in before the war and in the war also. So it's tell us that still people come into this region not only for the living but save the money, because this is the no any opportunities in other places like in Dubai, not in the London, not in Singapore, not in the Europe, not in Russia, but Dubai. So, and trend number three, we believe that um, these two options that I mentioned previously will give us a next growing market in the end of this year in case of political stability. Because if you see the Dubai previously, last 10 years, it's like a waves. The market was only waves. And what we see right now, especially from the rental, we see that the people who cannot previously in the previous market allowed to them to rent a villa in Dubai Hills, let's say. Right now, they can't do this. They can't rent it. And they growing up the quality of life. So it's mean that the lower base start to be cheaper and it's free. It's mean that's the new opportunity to come to the Dubai for the new people. That's how Dubai grew in last 10 years, which is very important to understand. So this is the main thing that I want to describe.
Great. One of the things that I also wanted to highlight in our questions, speaking generally about prices, because definitely there are a lot of people when they approach the real estate market of Dubai, the first thing they look at is pricing, and they compare prices in different real estate objects. And I personally come from digital marketing, so I know it's a very common behavioral pattern when you, from a regular user, when you just look at the price, you look at the image, and then this is where you get the traffic. So this is very often, this is like the first step, and then you dive into other details. So we mentioned a lot of changes that are taking place right now, but speaking about prices in general, where are they heading right now? Is it like a stable growth, or maybe it's just stability and stay at the same time, or what is called correction? Would be great to hear some of your ideas about it. Oh, Alex, maybe you could start in this case.
So definitely, it's not correction. Definitely, because as I told, the good developers with a good product, they keep the prices on the same level. Even if we see the new start of Imitias in Jebel Ali, so they keep up prices higher than in previous projects because they have a huge amount inside of the apartments, and they have a good value for the brokers. So, but in the other hand, somebody tell me that, okay, Alex, this is the distress deals on the market. Yes, we have, let's say, from 3 to 5% of distress deals on the market, and this is no good to purchase for the customers, because if the developer give you a huge discount, let's say 10%, and ask you to give him a cash without SPA or something like investment contract, it's mean that this developer is not healthy. What I try to say here, so the big guys, the big boys who's playing in this market, they feeling okay. They have they have a money, they have a lands, they have a everything to be as stable as a developer in a huge time in the market. But small developers who don't have a money value, who have loans or JVs with the landowners, they needs the money, and they start to give you a discount to purchase something. So to summarize, it's very easy. The developer market, the off-plan market, will be clean in the next half of year. Many developers, small developers, come out from the market because they are not as stable. But big developers and the stable developers, big and medium developers, they will keep their prices at the same level. And when the market come back to the growth, they will, increase the prices. Definitely, it will be like this.
Thank you, Alex. And Angeles, is there anything that you would like to highlight regarding the pricing of the market right now?
Yeah, I mean, the insights that we have are, again, from the rental management perspective. Uh, what we see, as mentioned, is that the current rental prices uh, are anywhere from 10% to 60% below what we saw last year. Now, we do expect those rates to get much better after after the summer, but I think it makes sense to me that property owners who are highly mortgaged and have high payments to make, who are suddenly making 40 or 50% less in their unit, will have will have pressure to sell and exit the market. And I guess that's where some of the distressed deals that Alex may have mentioned might come from, at least in the ready market. Now, I'm an optimist, but I guess my outlook will really depend on how the geopolitical situation unfolds in the coming months. And also, I do see the ultra prime sector of the market holding on much stronger than the lower end of properties in the market. And that's because usually the owners we work with that have some of the most expensive assets in Dubai also have real estate in different markets in the world. They all believe in Dubai, and usually they're cash buyers. So they're more sentiment driven. They don't have the immediate time pressure. they're in a way less yield sensitive, whereas somebody who has bought a property and it's 70 or 80% leveraged, in my view, of course, might consider selling and might consider selling at a distressed rate, which I think will create some pressure, some price pressure in the sale market. But again, I'm an optimist, and I think things will play out according to how this socio-political situation unfolds.
Thank you. One of the things that I also wanted to highlight during our webinar is, of course, the investment topic. And we just received a question from one of our viewers in YouTube. So let me put this question on the screen. I'll read it for you. So Nick asks, if you had $2 million to invest in Dubai real estate today, considering the summer slowdown and current geopolitical uncertainty, where would you allocate it and why? Thank you, Nick, for this question. It's a great question. And before you start with your answers, in general, I was actually about to ask, is there any promising areas of investment? Because real estate market in Dubai was always connected somehow with the investment topic, right? So I think it's a great opportunity to connect the question from Nick and the question that I have in my list. So Angelos, we can start with you, and then we move on to Alex.
Yeah, absolutely. It's a great question from Nick. I think, in a way, opportunity right now is where pressure is. So anywhere in the secondary market below ultra prime, where you will find typically many mortgage owners, if you can find established buildings with management infrastructure already in place, and mid-market sizes, so studios, 1 bedrooms, 2 bedrooms, where medium-term demand is currently really strong, I think automatically there you could have a good opportunity for investment. Now, again, what we're seeing from this, let's say, crisis, is that the higher segment of the market, the ultra prime, let's say in areas like the Palm, it's holding on much stronger than what we see in secondary areas. So I think if the goal would be a high yield, I would be looking at any of those sort of pressured areas. If it would be more of a long-term, let's say, capital appreciation game, I would also consider a premium area where maybe you can find less of a distressed deal, but long-term, potentially it would be considered a slightly, let's say, more stable investment.
I write it all down just for you to know. It's the great ideas. Thank you, Alex. What would you say to Nick, and what's your overview regarding the investment climate in general?
So Nick, first of all, don't try to be a fast. And this is number one. Number two, don't try to look to double your money in the next year or in the next 2 years. There's no work like this. And the old story when the brokers comes to you and said, okay, man, you have a $2 million. Why you purchase 1 apartment? Let's purchase 10 apartment in the off plan, and we will sell it in the next half of year. So it's untrue. Don't do it like this. So the third is, if you're looking for off-plan market, this is the good idea because you're looking for a future. The future is why we buy in the off-plan market, because this is the new product. As you know, in Dubai, if you buying something from the ready market, it's maybe a little bit old in the next 2 years, in the next 1 years, and you need to renovate this apartment to keep the rental price or selling price or something like this, even if building can be old. So that's why off plan is the good. If you're looking off plan, and if you look in next 2-3 years handover of the building, play with us with the Segrex development, because in October we will launch the new project which called Jules Verne. It will be absolutely amazing project with absolutely amazing amenities. Or playing with somebody like Emitias or Iman, who have a very strong product on the market and who have the good capacity for the secondary market in the future. And one more strategy, if you don't want to, go into off plan, my recommendation to you is seeing the most luxury locations in Dubai, uh, which I'm loving, which I'm loving right now. I'm loving the AFC. In the AFC, this is new booming about the off plan, but the any one bedroom apartment starting from the 20 million dirhams, which is huge. And as I told you, price is not going down. The developers in this location not dropping the price. They keep the price and the price will become high. So, but for our investment, $2 million, it's not enough. So try to look some kind of good building with a good facilities and with a good operator. Let's say we have a Ritz-Carlton in the AFC. In the same building, we have a limestone residential, which is managed by Ritz-Carlton. So buy one bedroom apartment or two bedroom apartment, spend 1 or 1.5 million dirham, renovate it, and you will have the absolutely amazing location in the middle of Dubai, in the heart of the financial district, in a very good position with a management company inside of the building. And this is will be a long-term investment strategy. You can live there, you can rent it out there, you can sell it with a double price in the next year after the renovation.
Thank you very much, Alex. I have one last question before we move on to some other questions from our audience. I just remind to the ones who follow us right now that you can still comment and ask your questions in the chat. And after my last question, we will check all your comments. Uh, Before we end with so-called official part, um, speaking about real estate, it's very easy for someone who's interested in the real estate market in Dubai, but who has not enough knowledge to commit mistakes when you first approach it. And it doesn't really matter if you want to buy a property for yourself or as an investment. So, for this last question, could you maybe highlight top mistakes that you face with your clients, for example, when you give them information that people commit, and how to avoid those mistakes? Maybe like three mistakes. I think it would be great to also highlight it for our audience. As always, in this case, let's start with Alex, and then we move on to Angeles.
So the first and the main mistake is not do not have a financial plan, the investment financial plan. If you started your private investment, you should have the proper plan of exit, and you should have the proper plan of keeping, and you should have the proper plan of emergency situation. It's mean that, as I mentioned, the game when I have, let's say, $1 million and I plan to buy one apartment, but broker recommend me to make the two off-plan deals with the 20% payment for the off-plan, and I buy two apartments, and the next year I don't understand how I will pay this off-plan payment plan. This is not good strategy. You need to understand that if you allocate some kind of money in your real estate active, you need to understand that you are suitable to pay all the fees that you need to keep this active on the market, to rent it out or sell it in the future. This is very important. This is number one. My second advice: do not try to have the distress. Do not try to have a huge discounts from the small developers in off-plan market. Don't try to use, let's say, 10% or 50% discount from your off-plan deal, because this is the way for nothing. You will lose your money. You will never get your properties in many reasons. So don't do this. Make the proper SPA with the proper developer. Put your money in the escrow account and do everything in the proper manner, and have a financial plan how you will pay in the next year and how you will pay in a handover when developer will send you a notification for the handing over.
Okay, great. It's basically needs to be an article, a separate article, that all the things that you need to avoid and take into account once you
It's
approach the.
very important.
Yeah.
Because look, the quality of the customer for the developers, it's very important stuff. If you have a not very qualified customers who will, let's say, not paying you by the off-plan contract, not paying you on the handover, so you will be in trouble also as a developer, because your financial stability depends about your customers. So, and once again, when we working with our customers, we try to find the clever people who not to try to double the investment in the next year, or do something stupid like this. They just to finding out what they want to purchase. They have a proper plan and they're paying us. Let's say we have only 5%, default customers from 800 apartments, which is good. And these people is clever. They get their keys, and right now they on the market. They have a good rental income and so on. So this how to be a successful in this industry, because this is not speculative industry. I mean real estate. This is long term income industry, and this industry help you to keep your money for the long time in a very active stage.
Thank you. Angelos, what would you highlight regarding this main things that people have to take into account?
Yeah, it's a great question. I mean, one of the first things that comes to mind is trusting the headline yield projections that owners get from their brokers. You'd be surprised how frequently we speak to property owners who have just received handover of their properties. They have been told that their units will generate 8, 9, 10, 11, even 12% yield from rentals, and they get really disappointed when they hear the actual expected performance. So to any potential buyer, I always tell them before sort of purchasing to also get a second and third opinion, both from possibly different owners in the building who have invested and know what their units are actually making, and also from a few different management companies that they can get reliable data from to cross-check the numbers. That's the first thing. Second thing is sort of buying in buildings that don't allow for the operational flexibility. So there are a couple of buildings in Dubai that have a few limitations when it comes to what you can do with your units. Recently, I spoke with one owner who wanted to work with us, but actually she just realized that her building doesn't allow her to rent monthly, and she could only rent her unit yearly, which ended up being a big problem because right now, if you commit to a yearly tenant, and let's say you give a 20 or 30% discount compared to the actual price, after 1 year, when it's time to renew, unless you're in DIFC, you effectively get stuck with a tenant. So I think it's always worth double checking the guidelines and the terms of service that the owners association and the building management provides for each unit before going ahead with the purchase.
Okay, yeah, thank you. We have some questions from the audience, so let's look at the comments and go one by one before we finish our broadcast. For everyone who is listening and following this broadcast, just to remind you that we still have a few minutes live, so you can participate. So the first question from Valeria: what would need to happen for Dubai property prices to fall meaningfully? Anyone wants to start in this case?
Happy to start if you'd like.
Yeah, sure.
Yeah, so I think, and this is our biggest fear at the moment. As mentioned, the pricing pressure that we see is anywhere from 10 to 60% compared to what we had last year. Now, we expect that by the end of the summer to almost fully recover. And as a result, the effect on the actual sale prices, in my view, will not be really noticeable. But if we presume that, let's say in the coming months or just before the high season started in Dubai, we had another set of attacks, or let's say the regional instability became much worse. And as a result of that, of course, many tenants would reconsider being in Dubai. And of course, that in turn would have an impact on the actual yield that owners are receiving. And the chain result effect of that would be that the owners, again, who are mostly exposed, highly leveraged, will be forced to sell. So I think at the moment, the biggest, most obvious factor would be lack of stability in the region, and if that gets worse.
Okay, thank you, Angelos.
So
Alex.
absolutely agree with the Angelus. Let me write a picture to you. Okay, so let's imagine that real estate market is the wood, and the wood have a circles. Okay, so what happened right now? So somebody cut a half of this circle, and we go down to the another level. So if the regional instability is coming up, we will cut another circle, and the wood is will be a most tire. So, and for the development market, it's mean that if the amount of apartments on the rental market will be increased, the price will be down, and it's mean for the developers that developers will be decreased the volume of the market of plan. That's easy. So, but what happened with the price, nobody knows, because the market is big right now, and it's not market like in 2020 or 2016 or 28. So, mm, I think somebody should happen absolutely dramatical to drop the market down in this region. I believe in this region.
All right. So here you are the answers, Valeria. In case if you have any doubts, you can still ask something else. We have another question from the user. I truly believe that his name is Atom. Which segments of the Dubai real estate market do you believe are currently overpriced, and which still offer genuinely long-term value? Alex, so maybe we can start with you in this case.
Yeah, definitely. There's no overpriced on the market right now, dear Tom, because if um, any segment in the buy market overpriced when the war has happened, this segment should fallen down. We didn't see this on the market. It's mean that the market is stable. Moreover, just to think about that, the risk of the war in this region was in the price before the war. It's mean that the price contain before this a risk discount for this, and it's means that there's no overheat on the particular segment of the market.
All right, Angelos.
It's a good question. I mean, look, at the moment, what we see is that the largest asset types, for example, 3 bedrooms, 4 bedrooms, 4 bedroom apartments in touristy areas, are the ones that have the biggest impact on the rental price. So, however, that's not really reflected yet in the sale price of those units, because most of the owners are just holding on, and they believe in the market. So I wouldn't say that this part of the market is overpriced, but I would say is currently the most exposed to becoming overpriced in the near future, if I can say that.
Okay.
Okay, and I also agree. So if we see about the rental, especially for the short term, for the tourist, yeah, these apartments still have a good value on the market. But really, for the off plan, it's mean nothing, because if we let's talk about the marina. Okay, marina is the most iconic touristic stuff, especially for the 2 bedroom, 3 bedroom apartments, short term rental. So they still have a clients, and they still on the market. It's mean that there's no overheat, but it can be dramatically drop it down if the situation will be more unstable.
Uh, I would like to go with the last question before we finish. It's been 45 minutes and we had over 120 people watching us live during the broadcast. So, last question from Turner. We already covered it a little bit during our session, so maybe just a couple of things that you would like to add. So, which areas have the strongest long-term potential over the next 5 years? So, Alex, maybe you could mention a few things about it.
Let me give you some kind of exceptions. Let's talk that the regional stability will be on the place, okay? Because there is no any logic to talk about the what will be in the next 5, 10 years if we know that the war will come. Let's say, okay, we forget about that war. It's war is over, okay? So the most iconic stuff for the increasement of your capital value is the definitely Dubai South with the new Al Maktoum Airport city. It's absolutely amazing location with a good amount of the new apartments and the new projects with let's say new citizens inside these locations. The number two is definitely Abu Dhabi because Abu Dhabi is the most iconic places and it's still growing up. Uh, Even in the war, the price in Abu Dhabi is growing up, which is absolutely amazing. So the third location, which can be mentioned in this list, is Al Kuwait. If somebody knows these Emirates, it's between the Ajman and the Ras Al Khaimah. So Al Kuwait, especially new projects in the sea line, in the islands, is absolutely, it's incredible. And the price on the start is also high, but the potential of growth is very, very, very likely because from the 15 kilometers, you have the new casino in Ras Al Khaimah, and from the 50 kilometers, you have the Dubai, and 100 kilometers, you have the Abu Dhabi, which is, and you can live as a, in a village, in a absolutely virgin islands with the turtles and dolphins, and you have everything in a modern in apartments. This is the top three location in the UAE.
And thank you, Alex. Angelos?
The part of the market that I can speak about with most confidence, and also Alex mentioned it as well, is Abu Dhabi. And the reason I say that is because of the insights that we currently see from the management's perspective right now. We have, as an example, an apartment in Yas Island, which has the same value as a two-bedroom. Which has the same value, let's say, with an apartment in downtown Dubai, and the yield that this apartment is receiving right now is approximately 30% higher compared to what the Dubai apartment is receiving. Of course, this is currently because of the situation, but at the same time, we saw recently that even the government imposed a limit and actually currently does not allow the Abu Dhabi landlords who have rented their properties on yearly rentals to increase their price, which shows that there is very short supply and there's high demand even during a time of crisis. So to me, this is a clear indication that long term, at the moment, Abu Dhabi seems to be a very safe investment choice.
Great. So, thank you very much for this webinar. First of all, thank you to our audience for participating, and thank you, Alex, and thank you, Angelos. I think in this 45 minutes, we covered many interesting topics. For everyone who's watching this webinar, we will leave all the information about Segrex Real Estate Group and Oakley Group in the description under this video and our social media channels. So in case if you want to discover more information about those companies and about Angelos and Alex, you'll be able to find it. Thank you very much again, and we'll see you in online or maybe offline in Dubai. Thank you again.
Thank you. Thank
Thank
you
you
for
for hosting
having
us.
us. Bye bye.